Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is the 19th, 5 a.m. Eastern Standard Time. Let's get to it. A couple of headlines out there. One, it's actually an article, not really a headline, an article from Market Watch, written by Nouriel Roubini, and it spells out, he wrote it on the 18th, it spells out some of the what he calls white swan events that are out there. And all have to do really with the fact that this is a presidential, good morning, Pat. It all has to do with the fact that this is a presidential election year. And I always talk about how the market should go up in a presidential election cycle. But he's bringing up issues. I'm going to pop it into the chat box if anybody wants to read it. He talks about the threats that are out there due to the fact that this is, in fact, a presidential election year. And there are many governments that simply want the president out, and there are threats to the overall economy, and not just governments, internally as well. And you can see what's going on with the vote count over in the Democratic Party, Iowa in particular, and what they did to Bernie Sanders back in the last election. Some really interesting stuff. Iran is a concern. Of course, China, and to a lesser extent, I think, Russia. Moving on to, I'm not sure whether or not she said this or it was a paraphrase. I just skimmed through this article. I would need to read it again. I don't know whether or not she truly said this. I would be really taken aback if she said this. But Janet Yellen, she's back. Janet Yellen says the Fed should buy stocks in next crisis. I'm going to take this tongue-in-cheek. Again, I don't like to be alarmist. I just like to point out what's being floated around out there. And this is really concerning, but it's also a validation of what I've been saying, that we're living in a managed economy. I mean, think about it yesterday. The markets closed up on the day, and Apple closed well off the lows of the day. I'll go over a chart of Apple. I promised yesterday I would go over a chart of Apple and Amazon. I didn't do it, and I forgot all about it. I'll go over those charts today. And this is just something to watch out for. More floating of trial balloons to try to keep this market propped up. It would be so concerning if they ever did go in and decide that they're going to buy stocks. Really, really concerning. But it's just indicative of what we're living in, which is a managed economy, a managed stock market. Moving on to economic data. We have a bunch of Fed heads out there today, tomorrow. They just don't stop. I wonder how much they get paid for these speeches. But you have 4 Fed heads out there today. 3 of them Harvard educated. You have the producer price index, which is coming out this morning, 8:30 a.m. Building permits, keep an eye on that. That's a forward-looking indicator. And then at 2 o'clock, we have the FOMC minutes. That's a market mover. Tomorrow, weekly jobless claims. That comes out every week, obviously. Philly Fed Manufacturing Index. Watch out for that. And leading indicators. And then on Friday, we have the PMI, which comes out. And that has been hot and cold of late. Watch for a read below 50 or above 50. Below 50 is a signal of contraction. A reading above 50 is a sign of expansion. Let's get to the charts. So we'll go over the pre-market activity, and then I'll segue over into some charts. Amazon and, of course, Apple. Let's begin first. We'll go down the list. The U.S. dollar, excuse me, folks, I'm coming down with a cold. I apologize. The U.S. dollar is down slightly this morning, but this appears as though that we're simply consolidating. You had the Japanese go into recession. That came out over the past couple of days. Germany quite possibly is in a recession, and they are the juggernaut. They are the leader in terms of economics over in the Eurozone. So I would expect to see a continuation move higher on the US dollar. It looks like we're simply digesting gains and will probably move up higher. Now, we've been very, very bullish on gold of late, not of late, for the past couple of years. And yesterday was a major, major breakout on gold, major breakout on silver, of which we are long as well. We're not long of gold, we're long of the gold miners, but they broke out as well. Let's bring up gold. And we are moving up yet again this morning. We're at highs not seen since, I believe, 2013. We have taken out the highs of January. Remember, back in January, we had the spike in gold due to the fact that we were waiting for retaliation from the Iranians, or receiving retaliation from the Iranians. We got it, and we backed off, and we are pressing up higher here. We are a bit extended on this 4-hour chart. These are all 4-hour charts. Would I be a buyer of more this morning? No. No. Allow it to come in. We'll get a pullback. But this chart is looking very, very good. Many times when you get a surge of gold or the miners into the third standard deviation Bollinger Band, right here in red, you get a pullback, and a pretty significant pullback. That didn't happen. All it did was trade sideways, thus alleviating the overbought condition, and then it pressed higher. And it appears as though this new 4-hour bar, we're probably going to move up higher here. We have RSI, though, at nearly 86. Can it move higher? Sure. But I would expect a pause, a pullback in the next couple of days, and then a resumption of the move up higher. And this is purely a reflection of an economy, both global and domestically, politically, financially, economically, that's just gone amok, and it's being reflected in gold, the only true currency out there. Taking a look at silver, on a tear, up another percentage point. I spoke about this over the weekend and yesterday morning. We were looking for a breakout out of this trading range. We got the breakout, consolidated, ripped up higher. Can you buy it now? No, you gotta wait. You gotta wait for it to pull back in. I want to buy more. I can't go chasing it. Good morning, Trent. Nah, Trent. Trent just wrote down. I must say the fact that you're not rushing to buy this breakout. I'm impressed. No emotional buying, all business. Yeah, it has to be. We spent so much time, Trent, building up positions when nobody else wanted the miners. Nobody else wanted gold. Nobody else wanted silver. So we're well positioned, and we sat through the backing and filling, and we sold covered calls. We mired through. So we're sitting well with our positions, so much so that I don't want to go chasing the shares right now. I'd rather just sit back, let them go to work for us, look for opportunities to sell covered calls, and allow the shares to pull back in, take those covered calls off the table, book those profits, and just manage the position now. That's the end game. And we'll look for opportunities to build, but as you point out, we're not looking to go chasing these, and we'll let the rest of the market do the work for us and help drive these shares up higher. So silver, RSI on a 4-hour basis at 79.47, a bit extended here. No new 4-hour high yet. A little bit of topping action last 4-hour bar. palladium, just incredible. Just incredible. Up another nearly 7.75% this morning. RSI near 87 on a 4-hour basis. Now, this candlestick here on a 4-hour chart implies that we have a little bit of a tug of war going on between bulls and bears. So some profit taking, but with that profit taking, you saw buyers come in as well. So it's like a spinning top formation, a sign of indecision. So we may be nearing a short-term peak here on palladium. But overall, the chart looks really good. Taking a look at bond prices. It looks as though the 10-year Treasury bond is about to break out. Let's update this. An ever-tightening trading range. Here's our lower band, our primary lower band. Here's our primary upper band. And here's our tripwire. That's been triggered. We have a higher low, and we're now flirting with a breakout on the 10-year bond price. And that means yields are going to push lower. Watch out for the banks. Art looking to short this bet. He does, but he does today. Palladium, I guess. Pat. Let's move forward with where do we want to go? Bitcoin. Arthur wanted to short palladium. We all have our passions. That's his passion. Bitcoin down a little bit. An amazing reversal day yesterday on Bitcoin. So we'll be watching for a breakout here. Perhaps looking to add more to the position. But I wouldn't buy just yet. I'm liking the setup though. Let's take a look at the industrial commodities, copper. Copper, which rallied last week and yesterday, is coming under a little bit of pressure this morning. It's still up, but it was higher, and we've broken down below. We broke out here yesterday. Is this yesterday? Yeah, it's yesterday. Reversal bar, closing back down below this support level in green. Now we are testing the lower band of support. If we break it, expect a resumption of selling on copper. And I don't know why copper is rallying other than a dead cat bounce here, given the slowdown in global growth, especially in China. Looking at oil. Oil doing well. Had a good day yesterday. On a weekly basis last week, it broke out. Continuation move higher this week. Energy is looking interesting. So definitely a bounce back here in oil. So we'll be looking at energy as a possible long trade. Let's go to nat gas. All right, so we got the breakout I was looking for on nat gas. This upper band of support was resistance. Broke out here, pulled back to the retest, consolidating. Now we're looking for a confirmation move higher out of this consolidation. And then we'll be looking at names like UGAZ or UNG if you want lesser volatility, and use a stop right below the support level here at, let's call it 1.94 to keep it a little bit loose. 1.95 was the breakout point. We're at 1.967 at current. All right, let's go to the stock market. I've been trying to delay this as much as possible. So the Russell 2000, the small caps, they have broken out on a 4-hour basis. No retest yet. Keep in mind that we have the FOMC minutes from last month. Coming out 2 p.m. today. But the Russell looking pretty good here this morning. The S&P 500 up 0.22%. Let's go to my other chart of use this chart. The NASDAQ 100. Now we did add to short positions here yesterday. And it looks as though obviously they're going to open us up higher this morning. We still have RSI, which is weakening. One-hour chart. Solid. I have to say it. I can't speak my book. I was looking for yesterday a reversal bar on the day. And I did not get it. So it looks as though we're going to open up higher. The question is, do we close there? But given the fact that this is a managed market, we're going to want to keep these losses small on our short positions. What else do we want to go over here? Let's take a look at the pre-market activity of NUGT first. NUGT is a leveraged ETF putting along with the gold miners, of which we are long. We are gapping up higher here this morning. Okay, you got it, Pat. All right, so folks, I like to say I can't speak my book, but we are very extended here on NUGT. So while I'm long and very, very bullish, I would not go buying this morning, especially on this gap up higher. But it's a very powerful chart. Taking a look at, let's see what Amazon's doing in the pre-market. Amazon breaking out of the consolidation here this morning. Apple. Looks like we're going to rally up to fill the gap, which opened up yesterday. Tesla. What a move. So we are nearing the highs of the fourth. Actually, not the highs of the fourth. The highs of, the fourth. Okay. So the question then becomes, do we break out? Or, I knew that was going to be sloppy. Or do we break down? The test is always the top. The high was 968.99. It looks as though we're going to go up and retest it. What else do we want to go over? Let's go over SPCE. Oh, one thing I want to bring up about Amazon, and I didn't go over this last night with members on Market Wrap. Amazon, this is a weekly chart, but with a monthly overlay here. And I forgot I drew this a couple of weeks ago. And we have resistance immediately above on Amazon. Not immediately above, it's above, about 50 bucks above. So just beware of that. Let's bring up the monthly chart and I'll illustrate. Here you have it. Now, truth be told, we did open up a short position on Amazon yesterday, which is why I'm looking so intently at this chart today. Amazon's still looking good here. So I may need to stop out of that position. We'll give it a little bit of room, not much. We're using put options, so I'm not going to have much tolerance for being wrong. And some may say, you're probably not wrong, you're probably early. What's the difference? When you're using options. Let's bring up SPCE. Virgin Galactic. Wow, Jesus Christ. All right, let's do a top-down look. Oh, there's not much here in terms of data. Hey, vey. This is the value you're using a trailing stop loss. I'll tell you. You look like a champ when you use a nice loose trailing stop loss order and you get taken out up here and it closes out down here on a daily basis. You feel really, really good about yourself. All right, so daily chart. I mean, obviously it's a pretty chart, but it's so extended here. I couldn't go buying it. It'll probably go up higher, but I couldn't go buying it. You know, if we pull back to a support level here at, what is it, 26 and change, 26.50 and rising, I would entertain that. I'm typing out speculative here. All stocks are speculative, but this one here is a technical oddball. So I'm just setting myself a reminder. All right, so we'll watch for a pullback here. I think there's a good chance it moves up high. There's a lot of hot money chasing it. There's no doubt about it. But it's not something that I find investable. Far too much risk, especially in this market environment. 4-hour chart. We'll probably pull back here. I don't think that this is a difficult support level to hit. I think in all probability we are going to hit it fairly soon. But the path of least resistance is up. It's favored by the street. Who am I to argue? Looks good. INSG. Nice. All right, so let me see why I have these lines up here. Okay, now I know why. So it's a pretty chart. Let's get rid of this. It's a pretty chart. It looks as though it's going to break out here. I drew this line a couple of weeks ago, and we haven't broken out yet. We're very, very close to it. Actually, we have broken out. We're above it at current. So we have a monthly breakout, weekly breakout. We had broken out back here on the 13th. Breakout point failure, retraced down to the lower band of support, rallied back. The question is, do we close out the week above 8.49? That's the key question. Stochastics are looking good. RSI rising. Daily chart. liking RSI, higher lows, higher highs. So we're getting our stair step higher. We did close above support yesterday, a little bit of topping action. Watch for a retest here today. On that retest, if you're looking for an entry point to open up a position, look at the 8.49 level, and then you could use a stop immediately below that point if you're looking for low risk, possible high reward, and then start looking for a breakout above this upper band of resistance. And that would be interesting. So two potential entry points. You can combine both, but the shares look good. 4-hour chart. Here, this is exactly what I'm looking for on a daily basis. We broke out on a 4-hour basis. We're doing a pullback right now. This looks good. You're probably going to get a continuation move higher today on INSG. That looks good, Pat. All right, we'll leave off with Caterpillar. I'm getting long in the tooth here. You know, I expected to pull up this chart and for it to look very, very weak, but honestly, it looks pretty good. That may change as we do a deeper dive here, but we were in a trading range. We broke out in October, continuation move higher. January, took it on the chin, and we're holding support here on a monthly basis. We're off the highs of the month. Here's a weekly chart. Not loving the weekly chart. Here's resistance at 140.44. We're kind of in no man's land. I would need to see a pullback, a higher low. Daily chart. Yeah, I would avoid. We broke down yesterday below support. We have an ascending wedge formation I think there's a good chance this gets resolved to the downside. With all the China risks, I couldn't buy. I couldn't buy these shares. So the monthly chart still looks good, but we still have several trading days left to go in the month, and a lot of damage could happen between now and then. You shorted it, it'll probably pay off for you. Let's take a look at a 4-hour chart. Not a bad close yesterday. But in the morning we broke down. We were never able to recapture this prior support level, now resistance. So it looks as though the path of least resistance at current in the short term, very short term, is to the downside. Ugh. So I would avoid. And with that, folks, I want to say have a great trading day. Thanks for joining in at this ungodly hour. And everybody have a profitable trading day. Members, I'll talk to you tonight. Be well.